Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. How is everyone doing? Good morning, Ken. Yes, Jake. Real gross domestic product, GDP, the advanced Q1 numbers. Now, remember, this will get revised a couple of times, but the advanced came in at negative 1.4%. So a decline, a contraction in GDP versus forecast of 1.1%. Not good. You can see that over here. Morning, wavy. Can't say it's a good one with GDP growth negative after just one 25 basis point hike. It's not even about the basis point hike at this point. It's about what inflation's doing and everything else. Yeah, may very well turn to it. It was looking positive before then, but now it's looking negative. We shall see. We'll do the analysis. Good morning, Mike. We are another quarter of decline for us to be in a recession. Well, that was the old technical 2 quarters back to back of negative GDP growth. It's technically now, whenever they say it's a recession, it's a recession. I like the, again, as Bob says, we like the old version better. Jacob, good morning. Good morning, George. All right, so going to be another interesting day. By the way, the bigger thing to me is even the yen above 130. The Japanese government is going to keep buying their banks are going to keep buying their bonds to keep it at that 0.25% interest rate every day, unlimited purchase, and the yen through 130. We'll take a look at that chart. That is pretty significant. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back. Give me a comment and like or dislike the videos, whatever you think you should do. All right, where do we sit? Where do we sit? Well, I sit in my chair. So yes, Teledoc getting crushed. If this is not the beginning of the end now for Kathy, then it's going to be interesting. Upside targets on SPYQs. Yeah, all right. Okay, we'll get to that in a bit. Again, what we talked about, GDP growth negative. Then you had the core PCE coming in slightly better than expected, but GDP price index at 8% for 7.3. Initial jobless claims right on, so that's nothing. PCE prices 7% versus a previous of 6.4. So, oh boy, yeah. So this is going to get interesting. FOMC, I should refresh this. It should be coming out now. We'll just peek over here. Remember, we're still in negative gamma territory. So sell-offs and rallies will be amplified, and it's still at 96.5. I don't know if that's updated yet this morning. Earnings, we had Twitter, we had Caterpillar, we had McDonald's. Was up slightly. I did not check on Southwest. I've been too busy going through stuff yet. But if anybody wants me to look at something, here's your yen chart. Remember, we had that little potential double that actually on a 4-hour basis dipped into it and then moving back up. But here, I mean, this is your yen chart above 130. We could easily see this keep going back to like the highs in from the Asian crisis back in 97, 98. So that's going to be interesting. Yen just getting weaker and weaker. Going to be a fascinating move. Again, breaking through all this major resistance. And this is just, look at this monthly move. Monthly move up 7.45% so far. And if they're going to keep just buying this unlimited every day to keep their those bonds pegged, the 10-year bonds pegged to 0.25%, this could get really interesting for the dollar Japanese yen pair. Just wanted to point that out. That's going to be pretty significant coming up in the markets. Hello, Christoph. So let's get to those markets. S&P, we're up and now just a little. Let's get back to that 1 hour, pulling back a little right here. You see, but still at the rotation zone. Now we did on a 1 hour basis close above the 62.5. So statistically, that says we should at least over the next few days try to tackle 42.82 to 43.04 area. So keep that in mind. Now, that's not a guarantee of anything else. So I really need, if we're going to get something, I needed to get back above about 42.40 to the upside to really get bullish intraday. Let's just see. See, right now we're still stalling out at the 4-hour rotation zone, but that 42, I'd probably go 42.45. That's where I'm going at this point. 42.40, I'll start getting interested. 42.45 will be above that 4-hour rotation zone, and then I'm going to target. Next level is about 42.62. Then I'm going to 42.82. Key support for me. I don't want to see it drop back below. For the short term, very short term bullish case is 4,200. You don't want to see it drop back below this 37.5 harmonic. Then we'd be going down, most likely to retest the lows. So that's how I'm looking. Again, everything's got to be tactile, and it's going to be off the open. If we get momentum bars to the downside, we'll not step in front of it, and then keying off this 4,200 level. And I'll get the levels for the spiders and the Qs. So that's where we sit with the S&P, NASDAQ. Also, that 1-hour close back above the 62.5. Now, what throws a damper on all this, let me take off some of these other lines, is that really poor GDP number. So that's why, again, we're in tactile trading. That was unexpected. From just a technical analysis point, we should favor. But again, there's a probability assigned with this, and nothing's 100%. So my key line in the sand for the NASDAQ is about 13,095 on a closing basis. If we get momentum bars, not standing in front of those momentum bars, there could be some short-term sells. A little caught between this 50% and the significant level at 13,220. We start moving up. If it can get back up, then it's 13,295 above the 4-hour rotation zone. Then I'm targeting 13,388, 13,490. 490, and then the most recent highs, this little highs from back on the 25th. Again, line in the sand is about this 13,095 level. If we get below that, especially with the momentum, I'm watching for a retest of then that 13,000, then possibly 12,893. Dow, interesting enough, could not get the close, and the Dow's been lagging. Could not get the close above the 62.5 level, is 33,655 area, and pulling back right now. So the Dow, I cannot really get bullish on this until it gets above about 33,610, and that would be minor, and then more significant above this 62.5, and that would take it above that 4-hour rotation zone. Then my targets would be 33,781 and 33,913. To the downside, we're sitting right at this 37.5. Let me get back down to a shorter term chart. This 37.5, 33,400 essentially. We start breaking down there. I'm using the harmonics, 33,271. Then this is not good. That's that 37.5 level. There is a fair amount of support. So besides using 33,269, I'm focused on this area if we sell off about 33,186 to 33,143. We break back down. That's also, remember, the second target on this double top. Then I'm really targeting this long-term trend line, the lows from yesterday, and then the full double target of 32,837 area. What's the exact target? 32,835. Let me just peek in on those spiders and Qs real quick. Again, we have this this potential double, which is still in play. You see pre-market, we're still up here. So let me just revise this. It has to come to this little double in play. So 422.80. Hold on, I gotta go the other way. Sorry. There we go. 420 above 422.80, 425.94. Got that little gap. 427.50, then 429.07. I'd be focusing on the 427.50 and the 425.94. But this has to trade above 422.80 before that's even valid. And a close above that would be better. Now, it would get out of the way of the rotation zone. So I'd be watching for at least a 15-minute close above there to start utilizing those targets. But those are the targets. Where does that get invalidated? You start trading back down below, this 414 area. That's pretty good. It can go a little lower than that, but it's nearly off the table at that point. The Qs, again, Qs here. This is a little sloppier with that spike up, but we're still going to use these targets, okay? Because that's, the bottom came after that, and that's just a Mr. Yuck move, but we can still use the targets up here. You need a move, preferably at least a 15-minute close, 322.29, 325.38, 326.93, 328.47. You start getting back below about, it's going to be around 314, and that's off the table. And you see pre-market, it is up still. So those are the upside targets. Everything's going to be based off trading at the open for me today. Let's get back to, there's your targets, options 22 for the upside. Let me jump back to those. I should also, we have so many people trading these now. I should give the downside targets also. We break down below about 414.40, 414.55. I'm targeting 410.39. Then longer term would be 404.58 if we have a major selling day. And that's not just for today. That's for if we do break down again. Roughly there. We have this cluster, which is from the lows of the 24. So keep that in mind. And to the downside on the Qs. Downside of the Qs, nothing much has changed. We're 310.65 and 303.86. All right, now I can continue. Sorry for that little jumping around. We have the Russell. Again, my key level, we're trading back below this 1905 level. Get above 1905. I'm not even going back here to that major level. I'm coming back down now to around 1927 with the declining daily rotation zone. DAX holding up rather nicely on a continued rally in DAX, 14,170. If we break down, we're sitting right at this harmonic right now. If we break down, I'm going back to about 13,878. Then I'll be back to 13,677. Crude just sitting here right now. Let me take off these. You can see trying to figure out which way to go. So at this point, breakout play above 103, breakdown play below about 99.90. So that's all I'm watching for on crude. It's just trying to figure out which way to go. If we get below 99.90, my first target would be about 98.20 short term. And then I'm targeting, we get a close below that 98.20, then I'm targeting 96.25 to about 95.33. Gold pretty much flat, trying to put in, looks like a short-term bottom right here. So that's going to be interesting. I'll get very short-term bullish above 1902, and that's going to unwind some of the core position. And then below, if we break down again, 1853 is an add target for me. Again, educational purposes only. Silver's breaking below 2340. This was the add target. So now on a pop, first area now I'm watching is about 24 for a little unwind position. Let me get something on here. And below, there's no more ads for me until we get down to 22.23. I'll let it run for a bit to the downside. Notes again against the daily rotation zone coming back down. Still watching for that bottom to be put in. So on my rally now, I'm focused on 1924. If we do pull back, this is actually slightly favoring a pullback move. But we shall see. I actually love this longer term to form a nice double bottom here, because then that gets into the high statistical odds play. But in order for me to get really bullish without that double bottom, I need to move back above 120.17 at this point. Dollar index, again, coming up. You can see hitting that 103.95 and pulling back again. Next level we can put on at this point isn't till really 105.85. I can do a short term, but these aren't entirely reliable because we don't have a pausing bar yet. So 104.47, 104.98. Checking in on Tesla, up from the close slightly, but the targets still are the same, about 930 to the upside. And then I'd be focused on the rotation zone on the daily basis. Let me just check that 4 hour. Yeah, 930 is the 4 hour. Then I'm really keying off about 964, 956 to about 964 area to the upside. The breakdown area back below 875, really key is 868, 869 area on a closing basis, but if we start breaking below that intraday, my targets are about 830. Again, it's sort of trying to figure out where to go short term. What else do we want to check on? Could yen US dollar have any influence on precious metals? I'll have to think about that one. I actually don't have an answer right now with that. So MO gapping down after earnings beat and revenues, gap fill play. I'd start watching for the gap fill play. Remember, it was looking toppy up here, and I'm watching for the bigger pullback. So it'd just be a short-term gap fill play. But yes, you can put that on, especially if the market starts selling, because this is more consumer staples, which if the market starts rallying, this will probably pull back more. Now, longer term, I will watch for the gap fill play in here, but it's coming off of oversold conditions with divergences, and the cycles are rolling over. So I'll still go with the probabilities if above that, with gap fill play above the 62.5. But I would not be surprised if they did not trigger today and we got the bigger rollover if we do have a market rally. If the market sells off, I'll be watching more so for that gap fill play because there'll still be the rotation into consumer staples. Where else do we sit? Silver just keeps dropping, and again, a lot of commodities are getting sold right now. That's again why I like to trade them around a core position, and they will bounce back. You'll get that rip your face off moves in there. So that's why I'm being patient now on silver to the next lower level. There's times to be a little more aggressive, and this is a level to be a little more patient from where it's breaking down from in my book. These GDP numbers signal more selling. Long term, yes. Short term, I got to go off the minor probabilities unless we get momentum bars on the open. But long term, yeah, it's going to be more selling. Today, it's going to be just based off those opening numbers where we sit. It's still holding up. Here's the S&P, still holding up back to that 1 hour rotation zone, back to this resistance from the 27th of yesterday, and trying to rotate back up. So the market's so far not reacting, but everything's going to rely on about 8 minutes from now when it actually opens. Great. I'm glad options. Thank you for that nice comment. Just a reminder that roughly 20% of the S&P valuation reports earnings after hours with Apple and Amazon. Thank you again. That is completely accurate. Thank you for putting that in there. So after hours today, you have Apple and Amazon. Roku, Robinhood, we're laying off people, but these are the biggies. These are the biggies. So keep that in mind after hours today. So we could get some interesting price action, especially going into the close. BTU switching to bearish with these earnings. BTU with this. Longer term, I'll still watch for the short term. Yeah, we're still, again, it's return to the weekly rotation zone. I'd be watching for some key support a little lower, and then the gap fill back in BTU. So there'll be another play to the long side in BTU, but let me see where we sit. I need to find a better level. But based off this, it's trading right at these lows. So if you start breaking down below the lows from the 25th, I'd be really focused on this bigger pullback. If it does rally off of here, then it would be the short-term gap play. But you start getting, especially if you got a daily close below the lows of the 25th, then I'm keying for the bigger pullback in BTU. Let's check in on, and then I'm going to wrap it up. Again, Teladoc, pre-market 31.54. Remember, Kathy was going on a buying spree with this, now below the harmonic, so we could see this 23.40 before too long. That's going to get very interesting for ARK. ARK's going to be, wow. Unless this can get a NASDAQ rally on today, this is going to get ugly longer term for ARK. This is just going to get really ugly. Anything else? MCD, McDonald's. Remember, we hit that head and shoulders all the way down to the targets. I've taken this off, but pretty much flat with their earnings today. So there's nothing going on there. Sitting right at this 200. So if we start breaking down with McDonald's again, especially getting below this about 246, I'll focusing on this remaining gap play down here that's left behind. It was filled once, but there's still some key areas down here. There's still some vacuum space down here. So that's where I'll be focusing on with MCD. All right. With that, you are welcome, everyone. Good luck today. Again, if you start seeing momentum bars to the downside, don't be a hero. And if it rallies, we get the rally on because it still does statistically favor now a short-term little pop. Don't say, wow, GDP's negative, it shouldn't be rallying. You got to go with the technicals. And that rally is only for a couple-day rally. Keep that in mind. That's not for a major rally. And as Sterling pointed out, you still have Apple and Amazon reporting after the close. So could that shift things again? Yes, it could. Both, if we sell off today, you get Apple and Amazon with, they like the earnings reports. We could then bounce off of that. We rally today, and then Apple and Amazon, they don't like the reports, we could sell off. So it's very tactile trading. Don't get married to positions and use stops. And if things hit your stops, get out. There's always a time to get back in. I'll talk to everyone later. If anything major happens, I might do a lunch session today if it's major. If not, it'll just be after hours. Talk to everyone later. Bye.